You are looking live at a comparison chart of the Nasdaq, Dow Jones Industrial Average, the Russell 2000 Index, and the S&P 500 since the lows from October 26th of 2023. And today is February 3rd, so it's been a little over 3-month rally, and the Nasdaq is up more than 24%, so it must be the leading index, right? Well, maybe not. We'll take a look at that in a minute. The Dow Jones Industrial Average is up nearly 18%, the Russell 2000 a little more than 18%, and the S&P 500 up nearly 20% during this 3-month rally. So there you have it. There's the raw data. You can't fight it. You can't argue with it. That's just what it is. So I'm going to look at the Dow Jones Industrial Average, and you can see this index is making a new high. It's not up as much as the Nasdaq, but it's making a new high. So it must be the stronger index above all these moving averages and trending higher, right? Well, I don't know. It depends on which way you want to look at it. The S&P 500 is making a new high as well. So this must be the leader, right? It's up more than the Dow. The trick is here is it just, it's sold off more than the Dow. So it's up more than the Dow. And that's same with the Nasdaq. It's, sold off more. I guess I'll go to the weekly and give you this is the 38%, peak to trough correction, bear market, whatever you want to call it. Then we had the rally here in 2023. We had the breakout on May 10th. I believe that's when our new bull market started. It rallied up to 14,446 in July of 2023. Had this 3 waves down correction. And then we start on 10/26, where I showed you that comparison chart, where it's up 24%. So we have 12% down, 24% up. It's kind of symmetrical, right? Anyway, the Nasdaq is not near its high. That's why I went to the weekly chart. The high is 16,212. So while the other indexes are hitting new highs, sans the Russell, this is pretty far off new highs. Still more than 5%, I believe, off new highs. I'm going to go to the monthly, though, and just show you that, there's your 3 months down. And that doesn't happen very often. It happened in back-to-back years, 2022 and 2023. It hadn't done it in back-to-back years in a long time. But anyway, so we had the 3 legs down, and now we have this rally higher. And this is the 4th month. You could see, if I could get the track price on here, you can see that in January, I'll go back to November. November, we had a 10% gain, nearly 11%. December was a 5.5%. And in January, we just had a 1% gain. But now in February, we're already up 3%. So February, if it just stays where it is, it's way outperforming January. So 1-month move in January is not that big a deal. It did have that little pullback, a couple of pullbacks here in January. Got found support at the 21 a couple of times, like 2 or 3 times. Anyway, that's it for the indexes. I'm not going to get too deep in that because I like trading stocks. And there's one stock that I've been asked about a lot, and that is Super Micro. And people are asking me, first of all, I'm going to go back and tell you how I traded it. Not that anybody cares, but Rosanna and I had been discussing this thing around $50 back in 2022. We thought it was a $100 stock masquerading at 50. It was like a $2 billion market cap. It had phenomenal sales and earnings growth, and then it ran up to about 90, and I got shaken out. There was some short report, and it went down from right here 90 to 60 or whatever, but it doesn't matter. I bought it about 90, so I'm not going to get shaken out again, even if it undercuts the 50 and breaks my rules. I'm just holding on because this thing had shown me the ability to move, and I thought it was undervalued. So it ran up to 330, 350. I had about 37% of my portfolio in this stock, and it just ran up here. I sold it like a dummy. I sold at 330 and 350, nearly top tick, which I never do. And then I held the position on this day where it, undercut the 50. I had to sell out. So I was completely out of the stock at that point. And I tried to trade it once during this choppy action. I got chopped up, of course. That's what happens in choppy action. But I kept my eyeball on it because I knew it was still undervalued, and it was, had the ability to move, really had that, 50 to 350 move. That's, you want to keep your eye on stocks that move like that. Anyway, it made this low of a 235, you know, and it retested the low and undercut a little bit, then an undercut again. So I was just watching this thing, and then I did not buy it until it went through the 357, you know, standard buy point, paint by numbers, which I call it, 357. So I added there. So now people are saying this is a, you know, high tide flag. And I guess if you want to go to the weekly here, you know, go to the low of this week, you could say, you know, qualify, you know, in spirit for sure. You know, the low of this week was what, 275, so 550, you know, there's your pole, right? But there's no flag here. So what you need to see for a high tide flag, you know, in spirit anyway, you want to see this thing do something like this, you know, trade between like, you know, 550 and 600 for the next couple of weeks, and just you know, 560 and 600, let's say, and just trade sideways. I'm not sure it's going to do that in this market. It's really powerful stock, but that's what you want to see for your, you know, your pole and your flag, and then we can move forward to higher prices, which I think it will eventually do. Anyway, that's it for Super Micro. If you own it, there's nothing to do but just hold that thing. I know, pull back. Some people were, you know, buying puts. It's going back to 400. You know, I kind of doubt it in this market. Anything can happen, but I own this one. It's one of my larger holdings, and I'm just going to hold it. There's nothing to do right now. Don't try to tinker when you're in a bull market. You know, you don't want to be chasing performance or trading in and out of stocks. You just hold it for the big ride. We're surfing moving averages now. That's the theme. Surfing, I can't surf a lick, but we surf moving averages technically. Apple, and I can't get excited about this stock. I know a lot of people own it. It's now below a 3 trillion market cap. No growth here. You see these red sales numbers. Yeah, I know the earnings last week. Woo, 16% earnings and 2% sales growth. They do have new product in the Vision Pro, so I'll give them that. But you know, technically it just traded down to the 200, so below the 50. Consolidating on a base on base pattern. I just can't get excited about it. Sorry. I'm going to move on to Microsoft. Now, I do like this one. You know, they have the more of the AI component. You know, their Azure sales were phenomenal. Their earnings report was phenomenal. So how to get rewarded? It pulled back to its 10 EMA. And that's what happens with earnings reports sometimes. You know, even with a strong earnings report doesn't mean it's going to keep going up. You know, there's profit takers and what have you. And it recovered, had an inside day on Thursday, and then powered higher on Friday. That still looks good to me. I mean, if I'm just blindly saying I like Microsoft, I could buy that there and live with myself very well. Thank you very much. Meta Platforms. What did I want to say about Meta? Oh, 20% move. This is not really out of a base. It was already out of its base, but I would still consider that a power earnings gap. 20% move with 375% above average daily volume. So that is a move not to be ignored, Dan. Okay, enough of that nonsense. Amazon, yeah, you can't be buying it way up there. You just wait for it. This one broke out of a base. I would say that, you know, broke out here at the 155, then pulled back to its 50, which is usually a gift. You know, in an uptrending market, a strong stock makes this move higher, then pulls back to the 50. It's usually a gift, and it sure was here. In a bull market, you can get away with chasing and being sloppy and making mistakes, and you know, you still get rewarded. To me, if we look at the weekly chart, this is a weekly review. This thing just broke out here of this. It was what, a $200 stock not that long ago, before the Powell started raising interest rates. It was right up there, you know, so it's getting back to that old level, you know, 190. So look for that area to be an area of resistance and have it kind of flatten out there. Google, another pretty strong earnings report, not as strong as Meta and Microsoft, but pretty strong. And I'm on the weekly here, and you can see it fell 6% last week. It had broken out of this cup with handle pattern, and then now fell to its 50, and it's just finding support at the 50. So I think that's an opportunity if you want to get in long the Google, the Alphabet, or what have you. I'm not going to do Tesla. Just you know, for another day once it starts behaving better. NVIDIA, though, one of the Mag 6 Super Fab 5, I'm going to call it now. I'm going to drop Apple too. Anyway, NVIDIA, you know, again, paint by numbers here, went through this standard buy point here at the flat base at 505, ran up to 600, which is, you know, pretty nice 20% move. So you think it's just going to have resistance at 600 and kind of trade here, but this thing's surfing its moving averages higher. So all you have to do is hold it. And as long as those moving averages are trending higher and you own this stock, your portfolio is growing. There you can see the breakout in the last 4 weeks. Just that's nice action there. I mean, I think everybody should own NVIDIA, but they don't. So that's where the opportunity lies, right? Let me get to AMD, another stock that reported earnings last week. I thought the earnings were good. You know, a lot of people were saying, AMD sucks. It's going back to 100. Well, this thing ran from 93. You know, it was a two-bagger, 93 to 185 or whatever before earnings. So when earnings came out, you know, buy the rumor, sell the news. It's a good report. You know, it sold it down to the 21. That's textbook action, you know, I think. And then it recovered with an inside day on Thursday and then bounced on Friday. This thing looks phenomenal. It's going up, you know, just about every week. It had that one blip, but man, AMD looks strong. And look at this big volume coming in. They were piling in this thing before earnings. So, I mean, you know, people believe Lisa Su, what she says about the 400 billion total addressable market, and they're buying that stock. So you can't argue with them. I mean, you could say, you know, AMD had a bad report and the stock sucks and it's overvalued, but somebody's buying it, you know, somebody's buying it. And as long as these sales and earnings numbers are starting to increase, I'm going to believe my gal, Lisa Su. I'm going to stick with her through thick and thin. But yeah, very good earnings report. You can't argue with that. Broadcom had the ascending base pattern, broke out. Now it's pulled back to its 10, found support. You know, there's a little weakness last week with Jerome Powell disappointing the crowd. And you could have seen that on Wednesday if you were looking at like a 2 minute, 5 minute, 3 minute, 1 minute chart, how it just sold off. Broadcom, yeah, pulled back a little bit, but this thing looks really strong. Earnings at the end of the month, leap year day. Okay, I'm going to move on to CrowdStrike. This is one of my larger holdings. This one broke out about 160, ran up, and I got nervous here about 260 here because that's a big move. I just got to point out one thing about CrowdStrike is when the Nasdaq was pulling back last when was it pulling back? Hello, the 23, yeah, in April, well, not April, July. Yeah, July, October, and I got to go to the monthly, you dummy. Uh, when the Nasdaq was pulling back in July, August, September, this one was being accumulated. Then when the Nasdaq started behaving better, all the markets, all the indexes started behaving better. This thing really ramped. So when it went from 160 to 260, I said, I'm going to trim some. And then it pulled back to its 21. I just got out of it. And then it made that big move the same day as NVIDIA. It was a Monday morning. Was it January 8th? Might have been. And I had to jump back into CrowdStrike. So that's why I say, you know, quit going in and out of stocks. Just hold the damn thing. All it did was pull back to the 21. Now it's finding resistance at the 300 area and just forming this like flat little base here. It's bumped up against here. It's traveled across it 3 times. I'm hoping the third time's a charm. We're going to find out. They don't have earnings until March 5th. Speaking of earnings, Fortinet, this is another one that, you know, fool me once, shame on you. Fool me twice, shame on me. This thing, yeah, it sold off twice. This is a founder-led CEO, very well-managed company. I don't really understand why it's becoming a serial gapper, but once again, paint by numbers buy point here. 67.36, nice cup with handle here. They're going to report Tuesday after the markets close. I got to believe they're going to rebound and maybe buy some calls there before that report. Fortinet's a really well-run company. I think these are kind of an aberration. We're going to find out. It should, you know, this is an essential in today's day and age, but anyway, I'm not going to go through all the cyber security stocks today. Just wanted to mention Fortinet that they report Tuesday, something to watch out for with that buy point there. That is going to be on my ready list, watch list, or whatever. I'm going to be watching it. Datadog, another stock that I like a lot. You got to go to the weekly here. This is a weekly review. You can see it sold off as Powell was raising interest rates. All of our software names just sold off. like I say, during a bull market, a stock can go way higher than we think it should, and in a bear market, it go way lower than we think it will or should. And this one has consolidated in a stage one base. Once again, paint by numbers, buy point. 118. I think you can get it even higher. It had this 3 weeks tight. It was up 8% last week. That's a nice week, but to me, this thing's just starting to emerge from that buy point. They have earnings on February 13th. I'm gonna have to buy something nice for my Valentine that day. MNDY, I like this one a lot. Once again, the software names, high valuation growth, multiples contracted as interest rates, rocketed higher. And so now, interest rates are, moderating, and allegedly, there's going to be I don't know, an interest rate reduction here somewhere in 2024. Wall Street's craving it, but I think we can get by without it for a while. Anyway, these stocks are behaving well. And if we do get those rate cuts, these are the types of names that are going to be, rocketing higher and doing really well. I like this one. It has the Lord on its side, Lord Abbott. Even though the Lord reduced last December quarter, I bet you we're going to see an increase here on Monday. This stock has been acting really well since those lows. Anyway, another stock that I like in software is ESTC. Why? Because it's shown the ability to gap higher. I'm a sucker for these earnings gaps. And this is when the market was not doing that well, right? In September, and this thing was gapping higher. Right there, 20% move with 400% above average daily volume. What does it do? It just trades sideways, gaps again, and now it's doing this. It's trading sideways again. So maybe when it reports earnings on March 1st, we get another one of these, 37% move with 700% above average daily volume. That would be nice. If you want to go a little more short term, a little more recent, it tried to emerge out of this base and then sellers showed up. Tried it again, sellers showed up, but all it's doing is surfing that 21 EMA. And once again, we like to surf. And there's nothing really to do here but hold on to ESTC, and I think you'll be rewarded, and hopefully we get another one of those gaps higher. Anyway, that's enough for software. I got to go to retail. Deckers, I traded in Crocs for Deckers. Holy hoka, Batman. I just got to, first of all, go to the monthly chart and just show, and now Market Smith's not going to cooperate, right? Okay, so I'm not going to go to the monthly chart. Market Smith, why do you do this to me? Come on, man. Anyway, since we're on the daily chart, okay, there we go. There's your monthly. It went from less than $1, thank you very much, in 2022 to $882. So that was just like one of the largest gainers in this century, aside from Monster Beverage. So those retail names can be very beneficial to your portfolio. This thing dwarfs Apple, Amazon, just about any stock besides Monster. It even beats out NVIDIA, believe it or not. But I just wanted to show, I'll go back. This is a weekly review, so I got to show the weekly here. This consolidation in a base, and then broke out October 27th. That was our when the markets bottomed, and it broke out here on the 27th. That was the start of the rally. Then we had the follow through day. Yeah, that's a nice 18% move with volume. So now I'm talking about here, you can get away with stuff. If you bought it at 723 and it pulled back to its 50, well, after a breakout and an uptrend, the pullback to the 50 is a gift. If you bought it there, great. If you bought it there, great. If you chased it up here back at 723 again or 750, great. Doesn't matter. Anybody who bought this stock is rewarded because that's what Deckers does. And it gapped up higher on Friday with a 14% move with big volume. And I'm not saying this thing's going to run forever. No stock runs to the sky. And their Hoka Nugs brand are just, super popular and on fire. And, it can't get much better for this. I get nervous when my stocks do that, make that big of a move. But like I say, if you own it, there's nothing to do here but, hold it. Maybe trim a little and buy yourself some Hoka shoes. But anyway, Deckers looks fantastic. Another retail name that I like, I'm not going to say I love because that would be too emotional, but Elf Beauty, and this one consolidated in a long base here, and this is why, the bigger the base, the higher in space, or the longer the base, however, it's a question of semantics here, but broke out July of 2022, ran for more than a year until September of 23, and then it formed this base. All runners need a rest. And so this one ran, it needed a rest. People were giving me a hard time on Twitter about Elf. It's going to go back to 30 and the stock's a dog and blah, blah, blah. Anyway, it just formed a base, had the paint by numbers buy point once again. I bought it as it broke above the downtrend line, about 110, 112 here. But it formed this base and has that 140 essentially buy point, ran up to 153 and then shook everybody out. That's some classic action right there. You get shaken out, say goodbye to your shares. What happens? The big boys, institutions buy them and run it up to 170. Anyway, they report earnings on February 6th. I got to believe they're killing it on TikTok. Now, a couple people drive me nuts. It's got 76% sales growth. I don't know if it's going to do that again. I don't know if it might be 65, might be 60. I don't know. But 76%, they're not going to do that in perpetuity. 146 is the comp. So maybe they do 250 and come in, at 70%, something like that. They have new products. They're in skincare. They have new regions. They're spreading out into Europe. So they have they have the Can Slim, current and annual earnings. They got new products. They have the market in their favor. A lot of things going in their direction for the Alf. Who owns them? Oh, they got the Lord on their side. Come on. Alf is a fantastic company. Yeah, I've flagged it a couple times here. My alerts go off when I'm on the golf course, but I don't mind. Anyway, Alf reports Tuesday. I'm looking for good things. I'm going to go to the drugs because I'm a sucker for drugs. I don't do drugs or anything. I'm a natural kind of guy. But anyway, NVO, once again, one of these ones for your portfolio. My first buy on this one was thank you, Casey, my man on Wall Street. Bought it, back here in 99 for like $1. Split a bunch of times, ran up to 113. It just recently split last year, I believe. 2 for 1. So really it's a $226 stock. But once again, they reported earnings and people want to poke holes. It's an ADR. It doesn't get as much love as the American stocks. Okay, that's fine. It's quite gappy because it does trade overseas. So usually when it gaps up in the morning, it stays higher. When it gaps lower, it just stays lower. It's not a real wild stock. It's pretty controlled. Anyway, they had 24, 37, 39, and 41% sales growth, accelerating sales growth. This is with a supply constraint. And now they're removing that constraint this year, and they've left some demand on the table, admittedly, but they're going to meet that demand this year. And so I'm thinking, and also they have an NDA for kidney and cardiovascular patients, which will allow Medicare to cover them. I see nothing but good things. And okay, be a wise guy. And if this thing just, because people are giving me a hard time, it went from 39 to 54 to 69 earnings growth, and then it went to 68. So it slipped 1 point. Big deal. I don't care if it goes to 50. And if this thing grows 50% earnings growth in 2024, and this goes from 100 to 150, I'm a happy camper. Don't quibble with things. Just sit on this thing and let it ride. Anyway, I'm off my soapbox. Give me a break. Lilly, this is probably a little stronger than NVO. It is a little stronger. It's an American company. It doesn't have quite the horsepower on the sales growth. But we'll see. They report Tuesday, and I think that's going to be a strong quarter, obviously. I think that because they NVO and Lilly dominate the obesity category, and there's a lot of people obese these days, if you haven't noticed. I would say it broke out of its base last week. It was up 4%, so it's running into earnings, kind of a little bit like Alf. I think good things are being priced in, so we'll see how the reaction is to their earnings on Tuesday. TGTX, I'm just going to go over this quickly, folks. They have a meeting with Cantor in a Monday at noon Eastern time, which is 9 on the West Coast. And Michael Weiss, the CEO, they reported last November 1st. So I thought they were going to report February 1st. we're past that date. This guy, he's so flippant. He could just roll out numbers on Monday and just say, hey, we're growing at whatever, triple digits, and we're hitting all cylinders with our BRIOMV. That would not surprise me. There's a lot of shorts in this thing. It has the ability to ramp quickly. If you can see this chart, as it makes these moves higher, and it also has the ability to move lower. And then once again, whoop, this thing's a roller coaster. But if you want, when you want to ride it, you want to ride that trend higher. And there's some incentive for that CEO to get this company to 10 billion. Right now it's at 2.5. So you might be looking at a four bagger here. Just saying. VKTX, this is another, this is a speculative biotech company. We have a Sleuth surveilling the parking lots here, is we believe this is a takeout target. That once again, riding its moving average like a lot of stocks these days. And when they pull back to their, moving averages, don't get scared and shaken out. That's an opportunity for folks to get in. So we embrace pullbacks and we surf moving averages. That's what we do. This is a likely takeover target in the obesity pill form, weight loss category, I should say. Anyway, that's it for the drugs. I'm out of here, except for one more thing. I have the ultimate surf stock, Abercrombie and Fitch. This is what I call my Kelly Slater stock. It could be, you can call it Forrest Gump, because it's just run, Forrest, run. And it's just surfing its 10 EMA here. I don't mean to be a wise guy, but I mean, like I say, anywhere you bought this thing along the road, you could just be buying randomly. I like A&F, and you're making money. It made a new high on Friday, 109.47. Whoever bought this thing in the last year or so is ahead. How much ahead? Well, depends how far back you bought. Anyway, that's it for me today, except for I lied. I have one more thing. In honor of the great Steve Jobs, I just have to point out that there's a lot of stocks making new highs, surfing their moving averages. It's not just the Mag 7 driving the market. Don't be lazy. Don't fall for the media, finance media, narrative. There's a lot of stocks making new high. This rally is broadening out, as it should. This is not I should just say this is a normal bull market. This is typical action in a, midstream. I'd say we're still in the early innings, the middle of the game of the bull market. So this is what happens. Stocks like Marriott's making new highs. I'm just going to run off a bunch of tickers making new highs. You can write them down if you want or not. This is Granger, GWW, Caterpillar reports earnings Monday morning. If you didn't get it, too late. They're going to report Monday. New highs. That stock is a monster stock. Ingersoll Rand, same thing, breaks out of the base, runs higher, surfing the moving averages. What's not to like with that one? Parker Hannifin, machinery stock, broke out of a base, running higher, surfing its moving averages. How about this one? These guys make electric buses, transportation equipment. Bluebird, you've seen their buses, just recently broke out of a base, making new highs. Okay, so yeah, it's not just Microsoft and Meta and Amazon. They're so lazy. I don't know why this stuff bothers me, but it does. Laziness bothers me. Boston Scientific making new highs. That's a medical product. There's a lot of medical product stocks making highs. I'm not going to get into all of them. DraftKings, everybody's gambling on everything they can get their hands on here. Nice double bottom base making new highs for a DraftKings. JBHT, our trucker friend out there. What's up, Paul? Traveling the world, or at least the United States or North America with his big rig. And JBHT making new highs. MasterCard, people spending. Yes, they are. People are working. That's another thing. The job reports, people are working, celebrate it. Geez, don't wish for a rate cut, you lunatics. We want people to work. We want people to spend. We want people to afford their mortgages and not be foreclosed upon. That's all a good thing. Intuitive Surgical, yeah, people are going back for surgeries now, elective surgeries. Oscar, one of my favorite basketball players, Oscar Robertson. We got Oscar Health here. All right, insurance, health, PSTG, our friend Charlie Giancarlo. former Cisco executive, now running things at Pure Storage, and this thing is making new highs as well. So you can see just stuff all over the place. Pollution control, that's a nice way of saying a garbage stock. Waste management, once again, just surfing the moving averages. A lot of Kelly Slater stocks here. HVAC, air conditioning, come on, folks. I mean, this is not that hard here. Right, it's just surfing the moving averages. And then Pinterest, as soon as Elliott Management got involved here, Pinterest joined the surf club, running like Forrest Gump. Anyway, that's it for me today. I don't mean to be a wise guy. It's a bull market. I mean, everybody's a genius in a bull market, but try not to go in and out of stocks. Try not to, be trading all over the place. Just ride your winners, surf the waves, go out, golf, walk, hike, bike. Don't stare at your screens all day. It makes you more inclined to trade. Anyway, that's it for me at mcstockcharts.com. We never give up. Thank you for watching.